Hello, and welcome to new update from the Markets Middleman. Today is Wednesday, June 10, and I'm about to share with you my perspective on the markets prior to the CPI and the inflation news, which is going to be today during New York session. So, without further ado, let's get into it, starting with the DXY. So, we also last week how price displaced higher, taking the low of Thursday and marking a breakout of this almost 3 weeks range. So we've seen price close above this inverse gap over here, not reaching this internal two relative equal highs, opening the target to sweep this buy side and this buy side over here. So this is going to be the protected low. Price shouldn't close below this low in order to protect the bullish bias. But as we can see so far during Monday and Tuesday, price swept this low over here, the low of Monday, and also Tuesday marked a sell side. So there's a huge imbalance over here. So of course, to be able to see it more clear, I want to scale down to the lower time frame. But overall, I put in my mind that, okay, Monday high is subject to be taken as well as this buy side. We will see later on for this buy side, which is the two relative equal highs over here. It would really depend on this huge external structure and the whole range that DXY had been trapped in pretty much since last July of 2025. So we've seen DXY trapped within this range. Of course, it's trending, but within all of this range. So will we see a breakout this range during this month? No one knows, but that's why we trade the price level by level. So far I am bullish on the DXY, but I just want to see where price could actually retrace into. So for that sake, I grab my Fibo level and I mark the most important fair value gaps that are along the displacement to the upside. So as you can see, there's a huge fair value gap, but I don't look into any point of interest before the 50% retrace. Because if I want to buy, I want to be buying from a discount. So between the 50 to 61 Fibo level is where I'm eyeing. So I have this 3-hour bullish fair value gap aligning with this breaker blocks over here. And price already tested the 50% retrace. So price yesterday already tested the 50% retrace. So is this enough for price to go up? Probably yes, but since we didn't tap into the optimal level, I would need to see one of two things: either a full displacement above this breaker over here, because we lack the breaker, so price couldn't close above this internal buy side over here. That's why I don't think it's confirmed. But if I see a push to the upside after the news today and closing above this breaker, then this will be my area of interest in order to trade to the next buy side. And if we see like a good momentum, those two relative equal buy sides over here, and if we see a very good momentum, we can trade up into this external major buy side. So the other scenario I'm looking for, of course, I'm gonna avoid price within this range. The other scenario that I'm looking for is a full sweep into yesterday's low, tap into the 3-hour fair value gap, which extend to this low. But I mean, I want to see price just stabilize around this level over here, and from here I want to see a break of structure, change of character, back bullish in order to open up the target to Monday high and this buy side liquidity. So it's really simple. When you just stick to those two kind of setups, this is what I want to see. Again, just to sum it up, if I see a break of structure to the upside, then I make sure that, okay, this was the low and I trade to the buy side. But what I personally prefer is to see a full raid into the sell side, tap into the bullish fair value gap and 61 Fibo level of this displacement to the upside. And from here, we're in the optimal discount for this displacement in order to trade it higher. So with that being said on the DXY, right now we can go ahead on the EU, GU and gold in order for us to materialize or capitalize on this structure on the XY. So moving into the EU, in the beginning of the week, my preparation was the following. I want to see a retrace back into this inverse daily fair value gap, which worked as bullish, and this is exactly where Tuesday high was in. So I wanted to see a very good confirmation. So that's why I wanted to go to the 1-hour time frame. So here's the thing. Yesterday we saw price going down, okay? But let's just make a quick recap for the whole week until this moment and see what price is trying to tell us, or just simply if we are still in the waiting zone. So Monday opened, swept this imbalance over here, then swept the sell side that is also coming from the past. So I'll just jump quickly on the daily time frame to show you this three relative equal lows. So this was this week's low so far on EU. Then price closed above this external high on the 1 hour candle. Then it marked a bullish change of character. Then it retraced back during Asia session, swept the sell side, and marked another BOS, another bullish break of structure. Now here's the thing, why I haven't entered short yet from the EU is because of two reasons. One is that price created a bullish break of structure, so I want price to create a bearish change of structure to convince me that we are back bearish, or to close below this protected low. So if price closed the 1 hour candle below this low yesterday, then I would be definitely interested to short price from current price over here, which is the 2 hour fair value gap. So the lack of the breaker, I couldn't see a clear breaker over here to short, and the lack of the close below this protected low to mark a change of character, I haven't entered short anywhere. So this is the protected low, and this is the high of yesterday. Now, if I want to see price, if I see, sorry, price going down, okay, from somewhere, maybe sweep London high and create a huge displacement to the downside, closing below the sell side after the news, then I will use this breaker over here, aligning with the fair value gap or order block, in order for me to place my short limit into the full sell side over here. So you remember, same, it's the inverse of the plan for the DXY. If I see this without sweeping this high, that's okay for me, because now I understand, okay, price took the inverse daily fair value gap, created the market structure shift, change of character, it provided me an area of interest, and right now I have a very clear draw on to trade into. Or the other scenario is the following: either price go up from here, invert this to our fair value gap, I'll show you in a while, and create a breaker over here, sweep the high of Tuesday, and then displace lower. Then okay, this is gonna be the protected low, and this is gonna be the change of character already, and this is where I'm gonna be focusing on going short. Now, one thing worth mentioning on the 12-hour time frame is the possibility of a full raid into this level over here. And why I choose this level, I'll show you why. First, because we have a huge imbalance that needs to be fulfilled. Okay, needs to be fulfilled. Second, we would enter the OTE. So this is the 50% where price rejected, and this is the 61 Fibo level of this last displacement to the downside. So at this level over here, I'll be trading at the optimal level or optimal premium in order for me to sell short, targeting this sell side. But of course, knowing that the CPI is coming and it's a very heavy news, I'm not going to be shorting like blindly. At least at this level over here, I would need a very clear market structure shift, even though on the 15 minutes time frame. So I would need to see this, because at the time price closes above this buy side, it will mark another bullish BOS. So I want to make sure that price is going to resume bearish before I go ahead and enter any short position based off of this setup by itself. So I remove the Fibo level. Again, if I see this over here over the next few hours from the CPI, I will use this breaker over here with a close below this protected low in order for me to join sellers, or vice versa. If I see a sweep to this buy side or a tap into the 12-hour breaker, and then I want to see the same exact thing, but the only thing that changed is the protected low. So I will grab the protected low and I will wait for a full change of character from this low by itself. So this is the level. Last thing I want to mention is the 2-hour bearish fair value gap, but I cannot enter yet before I see another displacement, simply because I don't see a break of structure yet. So it's better for me to miss some moves early on, but it's way better to stick to the rules, and then I believe that the market is always going to show me a way in order for me to enter. So even though I don't get early, it's okay. I don't want to be early in the markets, rather than I want to be consistent. And there's a very huge difference in that, because at some point you catch yourself trying to catch or take bottoms and tops in the markets, and that actually can work at some point. But consistently, I've made a lot of mistakes trying to catch bottoms and tops. So that's why I learned that every time I wait for a confirmation, the market is always rewarding me. So with that being said, let's go into the GU from here. Moving into the GU, last week also, I don't want to spend a lot of time on this because I mean it all gets similar, but we also the sweep and then a full displacement to the downside, closing below this low and not reaching this sell side yet. So yes, we still have business open over this sell side. Now yesterday, price already tapped into the tip of the daily order block, and it closed all of this daily fair value gap without closing above it. But what happened is the following. Sellers couldn't maintain the close below the high of Monday. So Tuesday still closed above Monday. So maybe the high of yesterday is still subject to be taken with a full tap into the body of the daily order block. And if you align it over this to the left side, you see how important this liquidity was. So the high of yesterday, adding it to the daily order block, I think there's a huge potential in case we saw one more raid to the upside. Now the plan for GU is similar to the EU. Yes, we tapped into a critical 12-hour breaker that was over here, and yes, we covered all of the fair value gap on the daily time frame. But here's what I want to see. So moving into the 1 hour time frame, also like pretty similar to EU, the protected low was very far from yesterday's dip, but price created another low. Okay, so this is the protected low that I'm gonna be waiting for. So again, same plan for GU. If I see a break below this sell side marking a change of character, then I will use this breaker over the 50/61 Fib level in order to take those two relative equal lows. Okay, and if I see a full raid into the buy side or the high of yesterday, then yes, I'll also be looking into a displacement over here and then carry on to this sell side from last week. So overall, in case none of that happens, GU still has a very nice and big target to the downside. So let's assume that price don't want to give us anything over here, a full close below the sell side, because notice something, this is the external high and this is the external low, and everything in between is just internal. Okay, so if you really want to continue the overall external move, you'd need to wait for a push below the sell side. But okay, since the bias is clear, the DXY is showing us the way, EU already front run this move, then yes, you can actually take into consideration this change of character, this displacement, going back up and then targeting this sell side. And after this sell side, we'll be waiting the same exact thing all over again. We will wait a BOS into the downside, a fair value gap aligning with this breaker over here in order to target this sell side, which is April low. And notice those liquidity over here. I think there's a high chance for all of those liquidities to be taken out within the upcoming days/weeks. So yes, that's it for GU. Pretty straightforward and clear plan. Now, last but not least, we see gold just moving down, and everyone thinks that gold is just crashing. But in my opinion, this is very healthy. What's happening with gold is actually very healthy. Let me show you why. Because if you just jump on the monthly time frame, you see that gold was going up officially since October 2023. So it's almost 3 years of going up. Let's say 2.5 years. So it's just been correcting for 1, 2, 3, 4 months. Okay, now where I'm eyeing on, where this retrace could finish from gold, is at this monthly imbalance, which was created during September 2025. So this is where I want to see price start grabbing some buyers, fill out those inefficiency. And I think gold is 100%, not 100%, there's nothing 100% in the market, but there's high chance that gold overall, okay, from now until 2030 is bullish, okay, no doubt about that. With the currency devaluation and things just gonna continue going into the favor of gold pushing higher. If I also go into the weekly time frame, yeah, but it's just a matter of question till when gold can actually retrace lower. And I think within this monthly fair value gap, there's a huge weekly imbalance over here. So this area starts from 3.5K into 3.8K. So there's this almost $400 range, which I think will be the support for gold before it starts taking up again. And yes, anything can happen. Gold can still go lower. That's why we trade level by level. And I'll be making some updates regarding those levels. But for today, okay, for this week, what's happening on the daily time frame is the following. We've seen another BOS, price creating lower lows, lower highs, obvious stuff, okay? It couldn't give us any significant retrace back into this order block or fair value gap. It just took the high of Monday and also went lower. So this is the sell side. This is the first target for gold. So here's the thing. I go into the 12-hour time frame and I just set this 12-hour order block, this 12-hour liquidity over here. If I see price going back up, giving me a discount, okay, or actually premium to sell into the sell side, yes, then that's great. This is gonna be my plan for gold, or at least go into the 12-hour fair value gap after the close of this candle and give me a market structure shift on the 1-hour time frame or 15 minutes time frame. That would be nice. Let's assume that price will go down. If price closed below the sell side, then I'll be looking into the same thing. But let's say another fair value gap was created over here, then I will wait a retracement for all of this push to the downside. Eventually we're gonna have a retracement on gold, whether it takes the sell side, whether before taking the sell side or after it, no one knows. But I think soon we might have something like this, cover all the imbalances that was created, and then continue the push to the downside. Keep this overall long-term view into consideration. And yeah, that's it so far for gold. So with that being said, really it all depends on what the DXY is gonna do. From here, I'm gonna be waiting patiently. After the news, I see the H1 where it's gonna close, and based off of that, I either wait for price to give me the confirmation, or I just do nothing. So yeah, just be safe. Try to avoid the volatility that's gonna be during the news. And yeah, let me know in the comments if you have a similar plan or maybe something totally opposite. Anything can change in those markets. This is why we trade them level by level again. So don't be attached into a certain idea. Always be flexible. Yes, be consistent on your plan, and don't change your opinion based on an intraday or internal push. Be definite with your bias. That's 100%. But at some point also adapt into what you are saying, because at sometimes we tend to trade what's in our mind instead of what's on the charts, based on the scenario that we like to trade and not what the price is really showing us. So this is a very important distinction that costed me a lot of hours on the table, and of course a lot of losses. So nowadays I'm more aware of the bias versus what I want to see from price. So yes, last but not least, stay safe, trade safe, and I see you in the next update. Cheers.